Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
Glad you're here. Welcome to Modern Investing Techniques, episode 108. Today is July 16th, 2026. I'm Patrick, broadcasting from Vancouver. Here's your daily market intelligence and today's practice trade. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. UnitedHealth's earnings beat and raised 2026 forecast highlight healthcare cost control plays that could fit a TFSA rotation away from volatile tech. The S&P 500 closed at 7,572, up 0.4%. The NASDAQ Composite closed at 26,269, up 0.6%. The TSX Composite closed at 35,416, up 0.3%. AI-related names drove sentiment after TSMC projected the boom lasting another 3 years and raised capital spending guidance. Earnings season remains active, with UnitedHealth lifting its full-year outlook after beating estimates on medical cost control. Healthcare and utilities showed relative strength as growth sectors rotated. The Bank of Canada's next decision is scheduled for July 24th, with markets pricing in steady rates. Now let us move into the strategy that explains why those healthcare names are holding up. Earnings beat momentum works when a company raises guidance on controllable costs rather than just top-line growth. UnitedHealth's move shows how medical cost discipline can turn a single quarter result into a multi-quarter re-rating. To implement, screen for names that beat on both EPS and revenue while lifting the full-year outlook. Then confirm the move with volume above the 20-day average. This approach has historically delivered the strongest follow-through in defensive sectors during mid-cycle rotations when growth stocks pause. The risk is that cost savings prove temporary if utilization spikes later in the year. Use your broker's earnings surprise scanner filtered for healthcare. Cross-check the revised guidance language in the release itself. That same discipline on confirmation signals carries straight into our practice investment today. This is a simulated trade for educational purposes only. No real money is involved. We are watching Bunker Hill Mining on the TSX. The ticker is BNKR in the precious metals sector. The catalyst is a new CFO appointment plus an improved Digby ESG rating announced today. The technical setup shows no 20-day volume spike yet. Shares remain below the 50-day moving average on the daily chart. Risk assessment flags this as a thinly traded name. Any entry requires volume above the 20-day average or risk of slippage. Confidence level stays low because this is a single catalyst without volume or price confirmation. Tracking executive and ESG changes in small cap miners shows how non-earnings catalysts can surface. Yet the rule set demands volume confirmation before committing capital. Listeners learn to separate announcement from tradable signal. No newly closed trade since the last review. The most recent practice investment has already been reviewed. Current holdings remain open and pending their scheduled evaluation. There is no new realized result to report today. Alpaca now offers AI agent trading infrastructure after raising $435 million in fresh capital. Retail investors can connect their own algorithms or use pre-built agents for cross-market execution without building from scratch. The platform suits intermediate users comfortable with APIs who want to test systematic strategies inside a TFSA or RRSP eligible account. Access starts at the free developer tier with paid plans for higher volume. Benzinga Pro's real-time scanner now includes dedicated filters for monthly dividend ETFs and high short interest names. Users can set alerts for volume spikes or earnings beat flags directly inside the platform. The tool is aimed at active Canadian and US traders who want one dashboard instead of juggling multiple broker tools. Pricing begins at the Pro monthly subscription. The insurer lifted its full-year outlook after reporting better-than-expected medical cost trends, sending shares higher. Add UNH to healthcare watch list for any pullback below the 20-day moving average. UnitedHealth raised its full-year 2026 outlook after delivering an earnings beat driven by tighter medical cost trends. Shares moved higher on the announcement as investors responded to the improved visibility. The company highlighted disciplined cost management rather than revenue surprises as the key driver behind the revised forecast. Markets interpreted the update as evidence that healthcare payers can still deliver earnings momentum even when utilization patterns remain uncertain. The result positions UnitedHealth as a defensive name that could anchor a TFSA allocation during periods of tech sector rotation. Investors are now monitoring whether the cost control measures can sustain the higher guidance through the remainder of the year. TSMC raised both sales and CapEx guidance, yet the stock sold off as investors locked in gains. TSMC delivered a record quarterly result and lifted both sales and capital expenditure guidance for the coming periods. The company tied the upgraded outlook to sustained AI-related demand that it now projects will continue for at least 3 additional years. Despite the strong numbers, the shares declined as investors took profits following the announcement. A fund manager noted that expectations for the semiconductor foundry have become exceptionally high after the repeated upward revisions. The market reaction illustrates how even positive guidance can trigger near-term selling when valuations already price in aggressive growth assumptions. Volume patterns following the release will determine whether the pullback represents healthy profit-taking or a deeper reassessment of multiples. Action: trim existing TSMC or SMH exposure on any retest of recent highs until volume stabilizes. France's surplus nuclear and renewable power is now flowing across Europe at record levels. French power exports surged 36% to a new record high on the back of elevated nuclear and renewable generation. The increase reflects stronger output from France's nuclear fleet combined with growing renewable capacity now feeding into cross-border grids. Neighboring countries absorbed the surplus, easing regional supply pressures during peak demand periods. The development highlights how nuclear-heavy utilities can generate consistent export revenue when weather conditions support renewable output. European utility exchange-traded funds such as IDV and IPU have shown relative resilience amid broader market rotations into defensive sectors. Sustained outperformance in these names would require continued strength in both nuclear availability and cross-border transmission capacity. Action: review European utility ETFs such as IDV or IPU for any sustained outperformance versus broader indices. Theater Chain reported its strongest monthly results in 6 years as audiences return for premium formats. Cineplex posted its strongest monthly box office results in 6 years, driven by renewed attendance for premium large format screenings. The recovery reflects audiences returning to theaters for higher margin offerings rather than standard presentations. Management noted that the performance marks the clearest sign yet of post-pandemic normalization in the exhibition business. The results arrive as the company continues to manage elevated debt levels carried from earlier industry disruptions. Investors are watching whether the momentum can extend beyond a single month and translate into sustained free cash flow improvement. Only a confirmed move above the 50-day moving average would shift the name from watch list status to a candidate for further review. Action: add CGX to consumer discretionary watch list only after a confirmed break above the 50-day moving average. Total trades stand at 41. Win rate is 56% with 23 wins, 17 losses, and 1 break even. Cumulative P&L is $280.97. Matched window alpha versus NASDAQ across 36 benchmarked trades is plus 7.0%. Sum of per trade alpha is plus 11.7%. Average return per trade is plus 0.69%. Best trade reached plus 20.11%. Worst trade was minus 11.80%. Current streak is one loss. Our AI analysis is learning from valuation discipline patterns and adjusting entry filters accordingly. Imagine you allocated 40% of your TFSA to Canadian equities last year because the dividend tax credit felt like free money and the names were familiar. Your order filled cleanly, yet the TSX's 50% weighting in financials and energy left you exposed to exactly the sectors already tied to your job and mortgage. The mechanism is simple. Canada represents roughly 3% of global market cap. A 30 to 50% home allocation means you are structurally underweight U.S. technology and healthcare that have driven most of the past decade's returns. Professionals always check their total geographic exposure across all accounts before adding another Canadian bank or pipeline. The biggest mistake with home bias is treating familiarity as diversification. Instead, calculate your true Canada weight, including employer stock and real estate. Then cap the equity portion at 20 to 25%, unless you have a specific currency hedging thesis. Before we wrap, open your brokerage platform and pull up the 20-day average volume for BNKR on the TSX. Set a price alert 5% above today's close. Note the exact volume threshold that would satisfy the catalyst confirmation rule before any position is considered. I will have an update on volume confirmation signals for BNKR tomorrow. That wraps up today's modern investing techniques. Remember, every trade is a learning opportunity, win or lose. Subscribe, share with a friend who wants to invest smarter, and we'll see you tomorrow. And if you'd rather watch than listen, find us on YouTube at NARA Network. Links in the show notes. And before you go, this show is part of the NARA Network, a family of daily podcasts on tech, science, and markets, each one a short, sharp briefing you can finish on the commute. If today earned its place in your feed, here's your next listen. Environmental Intelligence, the Environment and Climate Policy Brief for Canada. Find every show free at naranetwork.com. Want the written briefing with source links? Each show keeps a summaries page on naranetwork.com. Scannable, dated, and free. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about